Hi everybody, this is Alan Ellman, the Blue Collar Investor. In today's video, we're going to discuss cash allocation as it relates to setting up our covered call portfolio. One of the mistakes that some covered call writers make is that they devote too much cash to a particular equity. For example, if we have a stock that's $10 a share and another that's $100 a share, we're not going to purchase the same number of shares of each of those equities because the $100 stock will be more heavily weighted in terms of our cash exposure. So let's discuss the concept of cash allocation as it relates to setting up our covered call portfolio. In the BCI system, there are several factors we use in determining our portfolio. One of them is fundamental analysis, where we explore earnings and revenues of a particular company. Another is technical analysis, or studying the price chart of that equity so we can determine the price momentum as it relates to our covered call investments. And also we have a series of common sense considerations. These are really the ones that set blue collar investors apart from all the others. So let's take a look at some of the major common sense considerations before we focus in on cash allocation. And for those of you that have my third book, The Encyclopedia for Covered Call Writing, these common sense parameters are detailed in Chapter 8. The first and probably most important is avoiding earnings reports. We also discuss avoiding equities that report same-store monthly retail sales, so that report on a monthly, not a quarterly basis. And we have a whole list of stocks that are banned from covered call consideration that fit this category. We also require a minimum trading volume, a daily trading volume for each stock. We want our stocks to be properly diversified. We don't want to own 5 stocks all in the computer hardware industry. And we don't want to have the same stock more heavily weighted than all the others. So the rule of thumb basically is that no one stock should represent more than 20% of our portfolio, and no one industry also should not represent more than 20% of our entire portfolio. And of course we also have cash allocation, which is the topic of this video. So let's take a look at some of the principles behind cash allocation. We want to devote an equal or as close to equal amount of cash per equity. No one security should be overweighted in cash exposure. And we want to make sure that after we invest our money, we have a cash reserve left over in case we want to execute an exit strategy. As most of you know, all exit strategies start with buying back the option. So we need to have some cash in our account that will allow us to do that. Next, let's review the mathematics of cash allocation. We first must determine how many stocks are we going to have in our portfolio. For example, if you have a portfolio ranging from $25,000 to $50,000, you probably want to have a minimum of 5 stocks. And probably that would be a nice number. If you have closer to 100,000, you might want to increase that to 10 stocks. And for those of us that have a lot more than $100,000, then we may want to go higher to up to between 15 and 25 stocks, depending on what your comfort level is in terms of managing your portfolios. So it could be different for different investors. We want to maintain a minimum of 5 stocks in 5 different industries unless we're using exchange-traded funds. But for purposes of this video, we're going to use individual equities, which will normally give us higher monthly returns. So what we do is we take the number of stocks and we divide it into the cash available. And then we want to make sure again that we leave a cash reserve of 2 to 4% of our entire cash amount available for possible exit strategy execution. Let's take a look at a hypothetical portfolio that I set up. And in this portfolio, we'll have 5 stocks and we'll call them A through E. And let's say we have $52,000 in cash. Now, in our minds, we're going to set aside maybe $2,000 for exit strategies and use the $50,000 to purchase our stocks. Since it's 5 stocks, we're going to allocate approximately $10,000 per equity. Now, it's never going to work out exactly, so keep in mind we're going to come as close as we can. So let's go down the list. Stock A is selling for $10 a share. And if we divide that into the $10,000 we're allocating per equity, that will allow us to buy 1,000 shares and sell 10 contracts. Stock B is $20 per share. We divide that into the 10,000, and that will allow us to purchase 500 shares and to sell 5 contracts. Now let's focus in on stock C, because that doesn't round off exactly. Stock C is selling for $30 a share. So if we divide that into 10,000, we could purchase 333 shares. But as you know, each option contract consists of 100 shares. So there's no reason to buy 333 shares. We can round that down to 300 shares and therefore sell 3 contracts. Stock D is $50 a share. So we purchase 200 shares and sell 2 contracts. And finally, stock E is selling for $100 per share, and we can buy 100 shares and sell 1 contract. So let's take a look at the results. Stock A, we purchased 1,000 shares at 10 for $10,000. Stock B, we purchased 500 shares at 20, $10,000. Stock C, remember, we rounded down, so we purchased 300 shares at 30 for $9,000. Stock D, we purchased 200 shares at 50, $10,000. And stock E, we purchased 100 shares at 100, again, $10,000. The total amount of cash, not including commissions, that we spent on setting up this portfolio was $49,000, and that will leave us $3,000 for potential exit strategy execution, a very comfortable amount. Let's summarize. Cash allocation is one of the common sense principles used in the BCI system. We use these principles not only to increase our returns, but also to decrease our risk. We don't want to overweight any one equity in cash exposure. And we always want to have a 2 to 4% cash reserve in case we want to or need to institute an exit strategy. As always, feel free to contact me at allen@thebluecollarinvestor.com, or check out my website, which has a lot of information on covered call writing and many other topics related to it, at thebluecollarinvestor.com. Thanks for watching. Take care, everybody.